All right, should you wait for the perfect time to invest? What if I actually told you the perfect time doesn't really exist? All right, so we're going to talk today about dollar cost averaging because we know we don't know the perfect time to invest. And we know looking back, it can be easy to see the highs and lows, and we can see when we should have been buying in. But when we're looking forward, it's a blank slate and we can't see what's ahead. So I'm Ryan Furstenau, Furstenau Financial, and we're going to talk about all things dollar cost averaging today. What is dollar cost averaging? So we use DCA for short in our office here, but DCA stands for dollar cost averaging. And really, dollar cost averaging, it is an investment strategy where you regularly invest a fixed amount of money into an asset, like a stock or a mutual fund or an ETF. And you do it on a consistent schedule. So regardless of its price, you're investing systematically. So one example might be that you're investing $200 every month, and you always do it at the same day of the month, regardless of what the market might be doing. Now, this method, what it really does is it helps reduce the average price that you've paid, and it removes the emotional stress of trying to time the market. All right, let's talk about a simple example. So really, dollar cost averaging simply, when prices are higher, you're going to buy fewer shares. When prices are lower, you're going to buy more shares. And really, that's going to be the key is when you're buying those lower shares over time, if you hit some of those, it can lower your average cost per share. And so one example I just want to kind of talk through is let's assume you're investing $1,000 a month and you invest over a 12-month period. So over 12 months, you've invested $12,000. Well, that $12,000, we put in some random prices here. And at the end of 12 months, you've accumulated 1,195.54 shares. And in our example, the share price ended at $13 a share. So those shares were worth $15,542.02. So just as example, that actually grew. So not because of the dollar cost averaging, just because the share price went up. But the key to that dollar cost averaging is if you actually look at the average share price for that time frame, it was $10.25 per share was the average price on the days that you bought. But your average cost per share was only $10.04. So take your 12,000 divided by the number of shares, that was your average cost per share. So by doing that dollar cost averaging, you got that lower average cost per share over that 12 months. A couple reasons why this matters. So, one thing it's going to do is help take the emotion out of investing. It's also going to build consistency and discipline. You're investing every month. You're investing consistently. It reduces your temptation also to time the market. So you're not worried about, hey, is the market up? Is the market down? Should I be putting more in this month? Should I be skipping this month? And really, it helps you investing feel more manageable to you. Some of the misconceptions, or maybe one or two misconceptions, is it isn't going to guarantee you higher returns. That's not how it works. And sometimes, if you have a lump sum, it may do better to invest that quicker because in lump sum investing, markets tend to go up over time rather than down. They're up more than they are down. So you may miss out on some up days potentially. But if the markets have already been high, it may be a good time to dollar cost averaging in so you're not investing all at the absolute market high. So really in closing, remember, it's not about timing the market. It's about time in the market. And consistency, the second thing, consistency really often beats waiting for the perfect opportunity. In fact, dollar cost averaging is one of my favorite ways to invest. I've been doing it since I started in 1992 investing. I continue to use dollar cost averaging for my own portfolio as well as for our clients today. But if you have questions, send us an email, give us a call. We'd be happy to answer any of your questions on dollar cost averaging. Otherwise, we will see you next time.